Hi, ladies.
Hi, Tanya.
Hi, Tanya.
Hi, Virginia. Hi, Lavina. Welcome to Breaking into the Venture Capital World. I thought we could just have a conversation today, and perhaps we'll start with a short introduction of each of us so that our audience knows who we are. Lavina?
Yes. So Lena Mcmurty. I'm currently a partner at a company called Movac, which is New Zealand's largest and most established VC, sort of institutional grade. I am reasonably new to VC, which we can talk more about today. I've been in the company and in VC for only 2 years. Most of my career I've spent on the operating side of tech businesses. I went to the US about 20 years ago to do an MBA at Harvard, and after that, rotated through a series of companies, Starbucks, Microsoft, and then Amazon, in sort of general management roles at a reasonably senior level, and then came back to New Zealand 2 years ago and really kind of thought, what will I do in a way that I can give back to my country? And so I actually came at VC from more of an economic development point of view. And that's what I'm doing now. Really excited to be in this fund and having a ton of fun.
Fantastic. Welcome. And hi, Virginia.
Thank you.
Yeah, thank you, Tanya. My name is Virginia. I'm the founding partner of Asia Ventures, which is Asia's first gender lens venture capital fund. And I also co-founded She Loves Tech, which now runs the world's largest startup competition for women in technology in more than 50 countries across the world. So absolutely delighted to be here. We, at Teja, we really focus on investing at the intersection of technology and the she economy, whereby we really look at women and the value of women as a demographic in the entire investment value chain, whether it's, founders, consumers, supply chain, online traffic, mobile workforce, etc. Because we believe that the she economy is really, the biggest opportunity or arbitrage opportunity of our generation.
Welcome, Virginia. Thank you for that. I'm also here in Singapore alongside Virginia, originally from the UK, and been in Singapore for almost 5 years now. And previous career was in big international law firms, similar to Virginia, and started an angel investment network in Singapore about 4 or 5 years ago, and started to invest into female-led companies, sector agnostic across Southeast Asia, and grew that team to around 40 investors, and then turned that into a fund, Her Capital, also here in Singapore. And now I'm actually building something super exciting, and I wish I could talk about it, but we're about a month away from launch. Yeah, but it's super exciting, and I'm focused very much on mobilizing the wealth from women to support women-led companies.
That sounds cool.
Yeah. So welcome, everyone. Let's, I think, let's jump straight in. I'm really interested, Lavina, about your drastic change and what venture is like in New Zealand as well, because I've been to New Zealand and it doesn't feel a lot bigger than Singapore, but a lot more rural. And so what is going on in the venture world in New Zealand?
Yeah, so I start with sort of venture in New Zealand. I think it's really it's been a long journey across the last 20 years to build both sort of technology in New Zealand and also VC in New Zealand. But I think in the last probably 5 years, it's really exploded. Technology is now our number 2 sector. We sell more technology as a sort of an export than we do anything except for dairy. And I think we're on a trajectory to beat dairy. So there's actually a tremendous amount going on. There are now some, great second-time founders coming in. So I think there's a lot of first-time founders there, but we're into the generation of getting second-time founders. We've got a very active angel environment. I've been told by offshore investors, maybe we even have too much angel money in this country. But we've always had historically a gap in kind of Series A and Series B. And so what's happened recently is a lot of funds, new funds have been created, and the existing funds have raised much larger amounts of money really since COVID. So if you take kind of a window of just a 12-month period, I think we've raised something like 500 million in incremental dollars into VC in New Zealand. That's over the baseline that we already had. And then at the same time, I'd reflect that the capital markets are really globalizing. So in the past, where it might have been rare to see US investors down here, often if they came, they'd say, look, you've got to move your company to America before we'll consider investing. We're now seeing a lot of money coming from offshore. So both that kind of growth in the domestic funds, as well as a ton of US and Australian money swilling into New Zealand, is really kind of putting fuel on the sector here. So it's actually a quite exciting time to be in New Zealand doing VC and in the tech industry.
Do you think are you seeing a lot more? I mean, you mentioned you'd only been sort of in the space for 2 years, so probably hard for you to speak from personal experience, but I'm sure you've got a very good base knowledge of the VC historically. Are you seeing a lot more a huge influx of entrepreneurs and people venturing into that space, particularly like the tech, as you mentioned? Is that why you're seeing more?
Yeah, I mean, I think markets just hit tipping points, and some of our Australian, cousins have sort of reflected on what their journey was like in Australian tech, and I do think they're probably advanced relative to where New Zealand is. And it just it grew in a way that was linear, and then all of a sudden it got to this tipping point. And again, what are the factors that drive tipping point? Having a set of companies in your country that have found success, that then inspires more entrepreneurs to come into the market, having a few of those entrepreneurs exit so they come back in with more money that's being recycled, maybe start second ventures. And then critically, you've got to have that kind of capital structure to support it. And so if you think about kind of the capital structure, historically, we have not had a lot of institutional investors be willing to put money into VC funds, but that's one of the tipping points that's happened in this country. MOVAC was the first institutional grade VC in New Zealand. We had New Zealand superannuation fund our Fund 4, and then continue on in our Fund 5, and then that's been really a signal for other pension funds and private wealth to come into VC. And obviously some of that's fueled by the global environment of, hey, where else do you put your money that you're going to get returns? So I think we've just hit this tipping point in New Zealand. That's a really exciting time for the country.
Yeah, interesting. How did you find sort of coming into a existing fund as a new person into VC? What's it, and obviously not, a junior, if you're not just finished your studies and coming in at the bottom and working your way up, you're going in at a certain level. You've got a lot of, real working life experience.
It was hard.
Yeah.
And I think there's differences. Like there's a lot of new funds that are being started everywhere in the world, right? So you have a choice to join a new fund where you're coming in and helping to establish, the thesis and how business is done, and you're kind of on an equal footing. And then there's, joining a more established fund. And the choice I made was to join a more established fund, partly because I didn't know what I was doing, right? I was new to VC. So I very much wanted to come into a fund that had a reputation, a track record, the ability, raise from a set of established LPs where there was sort of a long relationship with those folks, and then people that I could respect and learn from. So that's the positive of it. But the challenge is it is a partnership, right? And the partnership I joined, I was the first new partner in 12 years. Can you imagine? So 2 partners had been there for 20 years. 2 other partners had been there for 12 years. And so when you come in having being new and you haven't been there through all the journey that they've been through, you don't necessarily come out of a classic, investing background. Yeah, that is quite challenging. And it was challenging for me and my partners. I mean, I think they would probably say they feel happy to have me, but there are times when I think they probably go, "Oh, Lavina," because I'm definitely coming in with a different point of view and different ideas, and that's what diversity is, right? I think we're a better partnership for it, but yeah, some days that's challenging, and I also think that if you come into VC from operating roles and take more of a non-traditional path, then there's also sort of challenges in that. And that's, by the way, it's becoming more and more common. I think I read in the US, looking at All Raise, which is an organisation that supports in VC, something like half of the partners in US VC came from operating roles and did not come through the ranks, right? And that's a consequence, I think, of a lot of forward-looking funds saying, hey, we do have to change how we look. And we don't have time, to grow that partner layer entirely organically. We do need to look outside and see how we can kind of bring people in from the outside. But then those can be hard discussions where, how do you sort of say, look, I don't have the same investing experience you have, but I'm coming with a different set of knowledge and assets that are also valuable. And at the time when I went through those discussions to join the partnership, I did seek some guidance and advice from some friends in the US who were women in VC, and sort of said, what's the playbook? Like, surely there's just some compensation, playbook I can get and, make my case. And they're like, no, every partnership's different.
Yeah.
And every time you have a discussion about things like, the economics of carry, it's just really, really hard conversation. And the advice, I got, or the insight that was given to me is like, you've got to sort of, know your worth but be willing to sort of walk away, know what your walk away point is, in order to sort of really sort of show that you're serious about saying, I expect that, what I'm bringing in, to have some sort of equal value. And I think other, again, it's not specific to my partnership, I love my partners, but when I ask around from other women that have come into VC, that's a very common story. I mean, I'd love to know if, Virginia had sort of a similar experience, but I've certainly heard that time and time again, that, those negotiations are as difficult or more difficult than negotiating any term sheet.
That's why you start your own fund, isn't it, Virginia? To avoid those conversations.
There are different types of conversations you have when you start your own fund.
Yeah.
Actually, so in many ways, you skip having to work your way up to the top because you just put yourself right at the top. But that is that brings another very unique set of challenges. Actually, I think one of the things that is not actually talked about a lot, when it comes to building your own VC fund, I think people talk a lot about investing. Okay, yeah, investing in hot deals. What are you investing in? But actually, when you're a founding partner, one of the key issues when you build your own fund is really talent. And especially when you're starting out, right? Because when you're building a small fund, right, and you're not starting out with $100 million fund, then the economics become a key challenge, and because you're on really nominal management fees, so you need to either have a really, really committed team, who really believes in the long run, economic outcomes, or really driven together by a belief in the common thesis. Or you'll just be ending up just doing everything, let's say two partners doing everything, with no further stuff. I think this is one of the most rewarding journeys that I've had. I think, we talk about fundraising, right? But I always believe that with Teja Ventures for the last 2.5 years, it's the fund which has been raising me. I think this fund has taught me a lot more. It's a lot more than just about, in the early days, I think it was just about proving yourself as a venture capital investor. But actually, I think, when you're building your own fund, it's a lot more about leadership. I'm very proud to work with 2 other GPs. So we're 3 GPs in the team. And I'm very happy to say that they're both more experienced, and I would say, smarter than me. One of them comes from consumer operations and private equity. She's 20 years older than me. And my other partner, is extremely renowned early stage investor in Indonesia, and he's had 5 exits on his own already. So I think for me, like a huge challenge was just to ensure that I got the right people. I identified them, identified their strengths, and identify how the 3 of us together work as a team. Because I think it's really easy, and I definitely fell into this trap in the early days, to want to prove yourself so much that you just want to be as superstar as an investor as you want to be, right? But actually, it's really about when you're building a fund, you're building a team, and when you're building a brand, it's actually really about the talent that you have and what roles this talent play in the team and how you keep pushing that forward. And now, as we finished our first fund and moving into building our second fund, a lot of these conversations actually revolve around that. I think, the other big challenge that I really faced, or I'd say the other big lesson that I learned, right, is that, Teja Ventures really focuses on gender lens investing. And gender lens investing was a very, very nascent concept, I would say 3-4 years ago. And so not only was, I was actually, you can say double whammy, coming in as a first-time fund manager and female. Hadn't thought so much about that, actually. And then coming in with a thesis, which is also not yet proved and seen as very niche. And so I think, and I think what I probably wasn't prepared for. So I was prepared to be a first-time fund manager in the sense of people saying, hey, you don't have a track record. And so our strategy was to really build a track record as we raised. So I got some great advice from 2 fantastic women who now run, I think, $400 million fund. And what they actually told me was that, Virginia, whatever you raise, just deploy it immediately. Deploy, raise, or else you're never going to get there. But I think what I was not prepared for was the cognitive bias against the thesis. So I was prepared for the bias against the people, but actually I realized, a lot of investors really liked us as a team. They thought we were a strong team, but I wasn't prepared for that. And what I was not prepared for the most was cognitive bias against the thesis from women themselves. And I have never said this on any call or any public meeting, but it's something which I think hurt me very deeply, actually, even though, investing at the end of the day, I learned to realize that fundraising is just, and capital raising is just par for the course. There's no need to take things personally, but I did take things very personally in the early days. And now I see the difference, after coming out of the first one where you have built your track record, gender lens investing as a thesis has picked up. Not everybody's looking at you like you're crazy, and your team is maturing. But I think a lot of those struggles, I think a huge struggle as whether as a VC or a founding partner, in many ways you're a startup yourself, you're an entrepreneur yourself, was actually, learning to really manage those emotions, not taking rejection too personally, and really sticking to your North Star. Because if you don't stick to your North Star, how are you going to rally your team of much smarter people behind you? So that was the part of VC I was not prepared for. I think I was prepared for as much term sheets and commercial negotiation because I came out of law and banking. I was very prepared for that part. We, pipeline for us, we love working with entrepreneurs. We had so much pipeline, but the part I was never ready for was really changing myself and challenging myself. And that is still an ongoing journey, very much, an ongoing journey. So yeah,
It's everything you've said there, Virginia, has resonated with me, as you can imagine. And the topic of today's discussion is breaking into the venture capital world, and specifically as female fund managers. I think regardless of where you are in the world, I still think that is no small feat. I think that is extremely challenging. I agree, like the world does differ from geography to geography when it comes to number of female fund managers and also and not just female fund managers, but funds with thesis that have not the traditional thesis like yours, Virginia, and like mine as well. And I think that one of the wherever you are, I think the challenge remains this. What I wasn't prepared for raising a fund was, I knew it was going to be a lot of work. What I didn't anticipate is really the way my mind has now opened up with regards to how the world works in terms of capital flow. So I just thought it's going to be tough to fundraise for for me, I'm a British woman in Asia raising a fund for women founders, right? I mean, that for me felt like a triple whammy. And it was and it is a triple whammy. And what I didn't anticipate was, I knew it would be hard. What I didn't anticipate is knocking on the doors of institutional investors. And I really feel like I've lifted the lid off a can, and now there's no way back for me, because now I'm so immersed in, wow, this world is so biased, and the capital flow is not going to, to fund managers. So yes, we can throw in a whole host of female fund managers around the world, but the reality is, unless they can raise capital from the traditional ways, through the traditional ways of raising capital as a fund, i.e. through institutional investors, it is incredibly hard for those funds to succeed, incredibly hard.
And Tanya, I can understand, because I've literally been through the same journey. So a couple of things on the way I've reflected on this, right?
Yeah.
Over the years. So the first thing is that I think raising a first-time fund, whether you're male or female, is actually very hard. I've known men who've gone out there, raised for 4 years, and have raised nothing. So with more resources and more experience than perhaps either of us. So I think being a first-time fund manager is hard. First of all, the second thing is that I did start off as well. In my earliest conversations with some very famous institutions, like best of class endowments, development finance institutions. Yes, yeah. I obviously I was rejected. I was quite happy they even gave me the time of the day. But I think I learned two things from that. I think the first thing I learned was that, it was great to know them, because at least it was a window into me understanding what they needed or what they were looking for. So that was my first thing. The second thing I learned very quickly was that they were not for me now, which meant that I started to minimize the amount of time I spent with institutions like funds or endowments or whatever, because I just felt like, even if I got super lucky, it just wasn't the right, and the fund size was too small. It was not the right timing, etc., so on and so forth. Thesis too nascent. But the third thing that I learned, and I think this is probably the best learning I've had, is that every no is a pathway to yes. And actually, what I started to realize is when I started to understand some of the limitations, whether they were private investors, family offices, individual investors, or institutional investors, when I started to understand, the reasons why they said no, because they were looking for something else, or because, for all kinds of reasons, or because they were worried about something, or because this wasn't the right risk profile, or because their family office, one of them supported it and the other three did not, because, and then I learned to sort of I never pivoted my thesis. My thesis is the same. Gender lens investing to me is a lot more than investing in a woman. And the elephant in the room for me, when I started to realize, right, talking about cognitive bias, is that most people either, did not believe that was an opportunity. They saw it as a limitation, or they thought it was an opportunity, but it was a very niche opportunity, right? Which is like investing in female founders, right? Gender lens investing to Teja is a lot broader than that. It's looking about the value of women, the way they're driving new economy verticals, so on and so forth. And so now that I'm structuring my second fund, I've taken a lot of those learnings, because what I also realize is that you cannot, no matter how hard you try, even if you're the best fund manager in the world, you cannot overcome cognitive bias quickly. It takes time, even if they love you, even if they like you a lot. I've had family offices like us a lot, know us well, but they just still can't get through their IC because their IC just doesn't buy the thesis. And so either you learn to shape your thesis, but stick true to your values by integrating it in a different way, or you for the first time I had no choice. I mean, I did the deck 3,000 times, and I just tried to get the feedback, log all the feedback and really learn from it, and really, and I think the one good thing which came out of the first fund was that the people who were going to be with us, it took a long time to identify, but we identified the people who were really going to be with us because they truly believed. And the people who either didn't really believe or didn't believe at all, we got to know them, and we got to understand why they didn't believe, or we got to understand, and so there for later. And one of the things I noticed, which was something I didn't expect, is that, maybe a year after I approached somebody, they're now coming back because now they've had time for them or their families to be comfortable. So I would say is that, I've always believed this, right? Nobody believed in fintech 10 years ago. They were like, well, the institutions were like, what the hell is that? Now fintech is like the hottest possible thing, especially in this market. What is social yesterday, is commercial today. And when I started talking about the she economy a couple of years ago, people look at me like I'm crazy. But that, now that I've dealt with my emotions, that doesn't bother me at all, because you see an opportunity, you stick to it. And I focused on building Teja because I really, like you, wanted to build a business case for general lens investing. And now that we're starting to see the results and the fruits of that, I feel like that pain, was worth it. And actually, a lot of male investors coming in recently, to my surprise and happiness.
Good. Yeah.
Yes.
That's great. That's fantastic. Yeah. I think just one last point on this is that you're absolutely right. I think you can learn from every no, and you tailor and you pivot, etc., etc. I'm with you, and like you, amended the deck 1,000 times and tweaked and but staying true to the thesis, because that was the opportunity that I saw. I think for me, my biggest challenge to overcome in the world of venture is thinking at the pace at which we're moving when it comes specifically to gender lens investing, because we may think we're making progress, but the data actually isn't backing that up too strongly. So we feel like everyone's talking about it, and they are. There is a lot of companies, there are a lot of institutions, some of the biggest banks and institutions globally are talking about this. They've got websites dedicated to it. They've got marketing campaigns and employees that are all over it. But I'm not seeing that really affect the numbers of the data. I mean, putting COVID aside, which is clearly not been great for women, particularly, but it also, pre-COVID, we hadn't moved in 7 years. The stats for female founders specifically, I'm talking about here. So and when you look at female fund managers, we're in a minority ourselves. There's 2.4% of women fund managers globally. And I wonder, Lavina, how you've found.
I'd love to jump in on this one, guys. Yeah. Boy, you guys have, you're in a very hard spot. I just, appreciate sharing that journey. And I'm just sitting here thinking, oh my goodness, if I tried to raise a gender specific fund in New Zealand, it would be so hard. But what I am reflecting on though in New Zealand is, maybe because we're a small country, change sometimes happens very quickly in New Zealand. I think that's just about being small. Maybe it's easier to change things, but we've had an incredible change in the last 2 years on female participation in VC. If I think about like our fund, for example, that 2 years ago was probably 90% men, today is 50% women. And I think about the new funds that are being spun up, like most of them are 50% women. One of my competitors was out trying to do fundraising and was saying, well, we're the most diverse, we're 50% women. And I looked at him and said, that's not special anymore in New Zealand. We're all 50% women. And so we've had this incredible change in female participation on the VC side, right? But yet I can see that it's not yet translated to us actually funding more women yet, right? Like it's not there. And even like there's a lot of, New Zealand is quite liberal, and so we talk a lot about things like ESG and diversity. And so, every fund has their, in our term sheets, we're going to include like a section on, you have to have a diversity policy, and you've got to have an ESG policy. And we require that, and the entrepreneurs do it. But again, that's not the same as hiring women, right? Like having a policy that you kind of force in as part of a shareholder agreement negotiation. It's just like you've ticked the box. So in some cases, institutional investors feel like you've done the right thing. But when you're really at the coalface, you can see that there's so much more to do than just put in some terms in a term sheet or a shareholders agreement. So I think we've made tremendous progress, but we're so far away from where we need to be still, right? It's not enough just to get women into investing. There's something else that has to happen.
I think it's been proven that if you have, which is why I was particularly interested in your story, Lavina, because it's been proven that if you take, import, a couple of female VC partners, GPs and above level, so part of the decision-making team, but into an existing fund, the thesis is written, the culture's already there, the strategy is there, you're going to make, a very small difference. Now, I'm not suggesting you're making a small difference, but you've gone into an existing infrastructure and ecosystem within itself that is, operating, and it's been tried and tested. So you even need to have a lot of women to kind of mix things up over time, or the real difference comes when it comes is women starting funds with a specific strategy of investing into X, Y, and Z.
I mean, I partly agree with that. Like I think that if you are a woman coming up through a fund, it might be, you might be more like the frog in water that's boiled slowly, right? You've grown up in that culture, and so you become, you then propagate the culture that was there. But I would say coming in from the outside, and by the way, having had some degree, of success in my career, I think I came in more as a challenger of really looking at New Zealand VC, at our company, and saying, look, we have to change the way we're doing things. And again, some days that's hard. Like I think some days I just wear out my partners and they tell me to stop challenging them so much. And some days it's actually exhausting for me. Some days I reach the point, of some days going, oh my God, why am I doing this? It's too hard. So I would sort of, if I judged my own performance and my partnership's performance, I think that we've made tremendous change. And some of that is, because of, having a new partner come in who wants to kind of shake things up. Part of it's COVID and the investing environment also being, we cannot continue doing business the same way that we've been doing business for the last 20 years. And so I think the partnership recognises that. So I would probably be a little bit more hopeful around the ability to come into an existing partnership and change it. Having said that, there's probably, again, a scale issue. I mean, our partnership, we have 6 partners. If you were coming into a really large, VC, that was a couple of billion, how much could you really change that partnership? It would probably be quite hard. But I think the scale at which we're operating at, if you've got 6 partners in total and you have 1 or 2 new ones come in who are asking questions and sort of challenging status quo, I do think that, you can have an impact.
Absolutely. Yeah, I agree with that.
Tanya, perhaps I can add a little bit about women in the entire VC ecosystem. The other thing I learned, over the last couple of years was that I think there are 3 types of actually investor bias, if you want to talk about really gender. Okay. So the first type is I would call the most extreme type, right? Whereby you're looking at everything from sexual harassment and pure discrimination. So I've heard ICs turn down very good companies, right? And the reason raising the IC was because the woman was 37 years old, which meant that they felt that she would have a family at some point soon, have kids, and that would affect. And so they pass. And these are very big funds. Okay, so that's one end of the spectrum. Then there are the two parts of investor bias. So the second part is the part we're all familiar with, right? So women and minorities locked out of very close networks. So investment opportunities are actually not evaluated equally, right? Because if you came from this network, basically it's basically how the club works, right? The deal gets passed around, everybody's in, the herd instinct. If you're out, you're out. This part of the bias actually pisses me off a lot more than perhaps the first one. Because what I started to realize is that, and this is a real case I have actually, in our ecosystem, a female founder ed tech company, better than just incredible in terms of metrics, really struggling to raise, and another, similar type company, just because of who the founder is, raising, but the metrics are shit. So that's that's actually even stronger sort of determination for me to double down. On great founders, because I'm starting to realize these are really untapped opportunities which are being missed, right? And I can now see it comparably, side by side, metric to metric, right? The third type of investor bias, I think, is actually, or investment bias, I would say, is actually cognizant of the VC industry as a whole. And that's because the VC industry, basically it rewards a certain type of behavior, which is, if you think about it, high risk, high growth, speed. Okay. And obviously, Tanya, you're familiar with this, but what we're starting to realize is that a lot of founders, female founders in particular, but it could be male founders too, right, are not necessarily building businesses this way. As we all know, female founders, in general, actually like to build more sustainable businesses. They like to have more revenue. They're much more revenue driven. They're much more careful on the bottom line. They don't like to spend more than they actually have. And it's a chicken and egg, because they're less likely to sort of raise more money. Therefore, they want to be more sustainable and break even faster. But the irony with this is that if you have a model like that in a VC world, you are penalized again. So instead of talking about the problem, right, this is the way we have dealt with it at Teja. Right. So the first thing I learned is that, it's very different to play as a $10 million fund than versus a $100 million fund, right? And the first thing is that, we started to realize the types of founders that we actually like, and how they may not look like very conventional VC founders, right? So I think that's the first thing, and that's something we overcome. And this is not just about gender. This could be looking at a male founder, who doesn't necessarily fit the VC mold either. I think that's one. But the second piece is actually the part which we as a team have been working on so much. What are the types of supports? Ecosystem support, strategic resources that a VC fund or an investor can provide a startup or startup founders, which actually don't look like very traditional VC plays. And how do you make that a VC opportunity? And that's the part which actually excites me, because that to me is how, when I think about the kind of fund that I'm building with Teja, I have the ability as a founding partner to shape that fund, that ecosystem resource, and the methodology of the way we invest. And this is something which I didn't know we were doing or had to do at the beginning of Teja. Now the investment methodology is actually quite clear. So what do I mean by that? So a couple of things. The first thing we realized is that, as a VC fund, we wanted to take a very focused approach, right? With a lot of, with strategic and operational support. I wouldn't quite call it PE, but it's not quite, very traditional VC, which is spray and pray. And actually, we realize a lot of our LPs like that very much. They like the fact that we're sort of an in-between, right? And we can keep refining that sort of methodology, right? The second piece is this, right? We started to realize that there are many founders who are not necessarily very traditional, what traditional VC would look at. They have the potential. What they need is either certain types of strategic inputs or resources to sort of unlock that potential. And I have an example for you. So one of the best performing companies in our portfolio is a plant-based food company, right? And I mean, they've done crazily well, right? And and everybody's chasing them now. When we first met them, they were a restaurant. So no VCs wanted to touch a restaurant. VCs were giving them some term sheets. They were horrible liquidation preferences. And they really struggled. But we came in and we asked the founders, what do you really want to do? Is this just a restaurant for you? If it's a restaurant for you, we can't do it, right? I turned them down twice. I only invested the third time. And they said, actually, we are open to opening CPG labs, a food lab for CPG products. And I said, okay, then we'll incubate that. We'll back that. And in the last 1 year, we've done 3-4 rounds already, right? and one of the largest food tech funds in the world has joined us. So the question for me as a VC is, and I do believe that as VC becomes more and more saturated, a VC fund can really differentiate itself by actually being more than just a capital provider, to entrepreneurs. And I think as the entrepreneurial ecosystem matures, for example, in Southeast Asia, and you have waves of second founders, a lot of founders are also evaluating VC funds and actually figuring out, what kind of input can you really give us? And so more and more I'm thinking to myself, right, as a good, as a good investor, as a good VC partner, it's not just about, identifying the deals which are hot, but it's also about identifying the deals which are not so hot right now. And taking them and making sure that you're building up your positions before the value inflection points when the market chases them. And that is how you can actually make your return. And I do think that looking at, women as an untapped opportunity, or gender lens verticals which are untapped opportunities, is a way that we're developing sort of our methodology, because we see it as actually better commercial returns.
Yeah. Virginia, it's interesting to hear you talk about this, because one of our values at MOVAC is what we call sustainable investing. In the past, New Zealand hasn't really had a whole ton of unicorns. We've had a bunch of like really decent companies that'll be, $500 million, but we don't mint unicorns. And so that whole US VC model where you spray money everywhere, you find the one that's going to be a unicorn, and then you double down on it, ignore everyone else, actually doesn't work in our environment. And so we pay a lot more attention to getting every company in the portfolio, if it's a sort of Series A, Series B style investment, not early stage, but if it's Series A or Series B, every company has to have some point of winning. So part of how we have generated, by the way, we've been top 25% quartile in every fund we've ever done versus USVC. So it works, is to say we're going to manage a bit the downside. We're not going to have companies that get pumped full of money until they kind of like, have a burn rate that's crazy and they aren't delivering the revenue and then they hit the wall. Like, let's just, be respectful of kind of capital. Let's put it in when it's needed, but like, let's not blow them up, right? And if we get a 2x return on a company, like that's about the worst we ever want to do. And what we've found is that you can actually generate like really decent returns if you take that attitude. But as you say, it's almost more PE-like. You don't just throw money in, you're sitting there beside them and you're bringing expertise and you're helping them, right? And it's almost the opposite of VC, because classic US VC is you ignore the ones that aren't working and you put all the attention into the good ones, but the good ones don't need you because they're the good ones, right? And so we almost are the reverse of that, where it's that time when the companies are struggling that they really need you to sit there and say, how are we going to work through this, get you back on track and, get a good outcome, a decent outcome for you, for the, for the investors. And it's worked really well for us. It's on my LinkedIn. I call it Peloton investing, which is the notion of, someone's going to be at the front of the pack and they're going to, win the race and cross the line first, but you actually want the whole pack of people to have a decent outcome, as opposed to just have someone that's winning and everyone else that's kind of falling by the wayside. So that resonates with me.
Yeah, I mean, I think that's really powerful. When I think of the whole conversation about women in VC, I think we spend too much time focusing on actually, yes, the inequality of it, even though that's obviously important, but we all know it. I feel like the conversation actually becomes a lot more interesting and a lot more powerful when we focus on, as you just did, the opportunity, right? The opportunity, the way that women in VC can change the VC game as a whole. And for us, from a gender lens perspective, how women in the entire value chain are actually driving certain types of new verticals, whether it's sustainability, whether it's certain types of digitalization, whether it's e-commerce 3.0. And I think this is the part, which is powerful. And like my first fund was, literally waving the flag for gender lens investing, but I started to realize that a lot of the world doesn't see the world that way. Yeah. But if it's about the evolution of VC, moving into, a hybrid model, a lot of investors have time for that. They just don't see it through a gender lens. But that is actually the impact of having a gender lens. More sustainable investing. That is actually the impact of having a gender lens. And that is what actually the world increasingly needs. And I think COVID actually has given us a good push in that direction. So it's about the way you frame the issue at hand. What I told Bloomberg recently was that people's thinking is when you put the word gender in there, or women, people's thinking just is blocked. It stops at a certain level. We need to let it transcend the gender level and to figure out what can women in the ecosystem or investing in gender lens, and what does that do for the entire ecosystem as a whole, and do we like that? Because when we put it in those terms, people like that. It's so these are just some of the things that I learn as I am building my own fund and our own unique methodology. I was not prepared for that, at the beginning, for sure. Yeah.
Yeah.
Can I ask you guys a question? Like, this is something I'm struggling with this week, actually. I had a female founder come and pitch me, and our policy in New Zealand is anytime we find a female founder, like, we'll give them an hour and listen to them, right, as part of that way of trying to move the portfolio more towards having diverse founders. So we guarantee it doesn't matter what the idea is, like, we'll give them an hour and listen. And this particular idea I knew a lot about because it was something I worked on at Amazon for several years. So I kind of had a lot of subject matter information about it. And in the end, we declined to invest. And the female founder came back and said, you say you support women, and you're not supporting me because you're not getting it. You're not investing in my company. And I sort of feel like if you were doing gender lens investing, it seems like the expectations that female founders would have on you and to invest would be much, much greater. Because I found that quite a hard interaction where a founder was basically calling me kind of like not good enough and supporting other women because I didn't invest. But I didn't believe in her idea, right? And it wasn't about gender. It was about me not believing at all. Like, I'm probably the biggest skeptic actually in her idea, unfortunately. How do you have experiences like that, and how do you deal with them?
I haven't had too many experiences like that, to be honest with you. I think that sounds like a bad experience. And obviously I've met with a huge number of female founders and reviewed pitches, etc. So it happens all the time that we reject many. The thing I try to remember, and now I've gone through trying to fundraise for a fund with all of those things that I said I identified as challenges. Now I've put myself in that position, and I can empathize with the female founder. So with that female founder, I'm sure she's actually a wonderful human and a very decent, reasonable person, right? I just feel that sometimes people are pushed, and I can see how hard it is for a number of female founders being, I get emails from female founders who say, I'm on my third company, I've had 2 exits, this is what I did, and look at what the emails I get for my trying to do a third fundraise. It's just you're just dismissed. And so I empathize a lot, and I think that she's obviously under a lot of pressure and trying to give the benefit of the doubt here. But now, I probably had really bad days too on my fundraising journey for the fund, where I was just like, really? Cannot believe this. Because I guess I'm also trying to say, like, for me, my fund thesis, the opportunity, everything makes so much sense. And I can see how the world would be so much better with my product, service, whatever. And she's probably thinking the same, right? And that's what you want the founders to think, So I don't know. I have a little bit of empathy, but it's not cool, obviously, to do what she did. It's not something I experience, a lot.
Well, good news. Hopefully I won't either.
No, I don't think you will. Okay, ladies, thank you very much. It's been a great conversation. I've really enjoyed our chat today. And hopefully you'll get to join some of the other sessions at the conference. Thank you.
Thank you, Tanya. Good to meet you, and Virginia as well. Okay. Bye.
Thank you.
Bye.
Bye.
Bye.